crypto consortium Fahrenheit has won the bid to acquire insolvent lender Celsius Network. The group will acquire Celsius's institutional loan portfolio, staked crypto mining unit, and additional alternative investments, and must pay a deposit of $10 million within 3 days to firm up the deal. I can speak English. Will, I'm going to toss this one off to you. I really like the headline, Fahrenheit acquired Celsius. And that wasn't an original thought. That was tweeted by Sandali Handagama, who is a CoinDesk reporter. But here I am broadcasting it for her.
Yeah, way to go.
Another huge L for Canada. Just Fahrenheit trouncing Celsius.
I know, right?
Get out of here with your metric system and your Celsius stuff. Fahrenheit. Woo. Anyway,
Fahrenheit wins again.
Yes, this actually kind of took me a little bit by surprise. I didn't know about Fahrenheit until a few weeks ago. There was some sort of like Fahrenheit gathering at Consensus, or maybe it was at Bitcoin Miami, talking about like putting this together. There's a lot of different bids to purchase the assets of Celsius, as there has been a lot of bids to purchase like the assets of Voyager. There's probably going to be some bids to purchase assets of FTX, things like that nature, right? Like they're basically selling off the chunks of pieces of these businesses which were legitimate and do have value, namely like the assets themselves, or in this case, the mining operations of Celsius. And those are going to go to other people. They're buying them for less than they're actually worth, and they're able to form a company out of it or sell them again. And Celsius, or the trustees for Celsius, are basically trying to get the most money from the creditors and bidders that are out there. Of course, there have been more in the past for Celsius and for Voyager, which is a separate Chapter 11 bankruptcy proceeding. But oftentimes these things fall apart. In the Voyager case, we've seen the SEC come in. In the Celsius case, I think it's just taken a little bit longer than they thought. Like they had buyers and then they disappeared. Now we have a successful one, which is great news for anyone who's been in this Chapter 11, because hopefully you get some money out of it. You might get some pennies on the dollar, but at least you get something. For Fahrenheit, this actually sets them up for a lot of success. So there's a few different companies involved with this. The biggest one that spoke to me was US Bitcoin. They're a new private Bitcoin miner out there that's likely going to merge with a public Canadian company called Hut 8 and make sort of like this super Bitcoin miner that's going to be like publicly listed. And now that they've purchased these assets, they also get Celsius's mining operations, which was also quite large, and a lot of people did not know about it. And so I think US Bitcoin is like, just through assets and mergers and acquisitions, going to become one of like the larger names, like a Marathon or Riot out there, if they can kind of get all these things together. All the other assets, I'm not sure what they're going to do. They might just liquidate them. They might just give it to other people. They might boot something up again. Who knows? Zach, to you.
Yeah, I wanted to ask you about that. You know, there's something like $500 million worth of liquid crypto involved here. But would you say that like the crown jewel of this is potentially the mining operation? Because I was very curious about that $2 billion valuation and sort of the discrepancy between the liquid assets and other things that were part of the portfolio. Based on your understanding, is this really a play for a new mining player to enter the space?
Yes and no. I guess I'd have to know what the asset breakdown is for the Celsius stuff on hand, because we saw it the FTX case, right, where the FTX trustees were like, we have a bunch of FTT tokens. They're worth billions of dollars. And it's like, no, they're really not worth billions of dollars. I'm glad you said that, though. That's a fun, cute line. In this case, I haven't seen like the allocation. So if it's a lot of Bitcoin or other things, it could be worth a lot. But the Bitcoin mining part of Celsius was actually a huge operation. They had well over 100,000 machines, I think, at one point. They're actively trying to relocate some of these machines because they were located at different hosting facilities, and now they're trying to like find places to stash them and start mining again. And they made money on this. So Celsius's biggest thing, right, Zach, was give us Bitcoin and we will give you a yield on top of that. How Celsius was able to do that in a lot of ways was because they were mining Bitcoin for much lower cost than it is to purchase a Bitcoin. So we're just giving out those mining rewards. And so now they have like this big operation. US Bitcoin's already a big miner. They have a lot of energy. They're just going to fill it up. And I think you are seeing a formation of a new big Bitcoin miner right in front of us, just through mergers and acquisitions, which is a little bit different than the past. Adam, I'll throw it over to you.
Yeah, I actually think we have to move on to our next story, but I'm happy to see kind of the bankruptcy process ending for a lot of these things, and I'm happy to see that it's happening a lot faster than Mt. Gox did in Japan, which happened back in 2013 and is still kind of working its way through the system now, although as we are constantly threatened, it seems like it's getting close. So happier that this is taking a lot less time.